Well, I mean, really what it did is it said that they're going to hike rates like planned. It really gave the market some certainty, which showed a pretty big rally. But what they're really saying is that we're lost. We don't know what we're doing. But the markets feel there's some certainty that this is going to be, the rates are going to be going higher. Okay. But again, if you remember that because of the CPI and the current interest rate, no matter, they could raise 15 times and nominal rates would still be below zero. They'd still be negative. And that's the real issue that nobody is addressing and nobody cares. But this is why I think you saw a little bit of a spike up in the markets after the minutes came out, because obviously this is old news, but they're confirming that they're getting a little bit more hawkish and are going to start to hike rates a little bit. With a idiotic Federal Reserve that has absolutely no clue of what is going on and no clue how to operate in markets. Okay. Look, they don't understand what the free market system is. They know how to try to manipulate dollars to facilitate others. And at the end of the day, they can do anything. Okay. But they continue to beat this drum. These rates, they should have never backed down in 2013 with the taper tantrum when Ben Bernanke was the Fed chair. They are afraid of their own shadow and really are as clueless as you can get when it comes to understanding how a market functions. Asset classes can price themselves, including interest rates. And the bond markets are telling you that the interest rates are going higher because the 10-year is now back over 2%, okay, on its way to 3, maybe 4. So again, we're going to see these rates rise, and the Fed is going to be twisted to do that. They're going to have to keep up with the actual markets themselves. Instead of getting ahead of the curve, they will be like they always are, behind the curve. Yeah. Now you look at the CPI, which is 7.9%. I'm telling you that inflation is much higher than 7.9%. And for the average American, it's probably more in the 17 to 18% inflation, especially depending on your earnings and what you have to do for a living.
Well, headline in CPI is 7.5. You're right, but that includes food and energy. In fact,
only 4%. It's a bad calculation, David. It is a dumb formula that does not fit what the actual world does. Okay, it does not fit that the bulk of our expenses, other than major appliances that may need to be replaced in any given year, it does not count that most people's budget is very heavily dominated by food and energy. I believe we're going to have a shortage in food come harvest time next year. Okay, and if you continue to have bad weather in Brazil and other areas, you may have a shortage in food. That is going to create some major problems. Higher interest rates are going to create some major problems. And you're going to start to see, when this thing starts to go, there's a big percentage of people in the markets right now that would prefer to be in a passbook savings account. Okay. And they're going to sell at first opportunity. And I think that can be the trigger. And as we've seen in every time in the past, once they get rocking, they can continue to go much, much lower. And I think that there's an even money chance that we do have. But again, I don't know if it's going to be this year, but I think when it's all done, we will have a 50 to 60% haircut.
All right, let me ask